Where are you seeing opportunity here locally?
Yeah, I think with inventory up, which is probably around that 40% number from last year, buyers have a lot more power or leverage than they originally did, right? Especially that first-time home buyer that doesn't have a property to sell. I think, in my opinion, the first-time buyer market is a great opportunity. You have, sure, higher interest rates, you got to take something on, but with the higher interest rates come more inventory. So you're able to negotiate that price a little bit down from where you may if interest rates were lower. So the buyer has more leverage, and then we just touched on refinancing, right? As things shake out into 2025, go ahead and refinance as things get into the mid-fives or hopefully mid-fives. Then you're going to get the best rate, and you're also going to get the best price, which is, the double whammy. I also talk about people who are moving up or moving down that have a property to sell. It's kind of a wash, right? Because you may be capitalizing on one side of the market, but you may have to make some concessions on the other side of the market. So whenever anyone asks me, and which happens often, when's the best time to move? I would say, well, that just depends on your personal preference, right? What is your personal situation? What are you feeling? What's your need? And we then come up with a strategy to align that time frame for whatever your personal situation is.
So Taylor, what's some of the key data points that you track to help know what's happening in the market here locally?
That's a great question, Zach, and we do track quite a bit of data. The one I always like to see is what sale prices are doing, right? What's the trajectory? And it just speaks to the Central Ohio economy that the average sale price continues to increase to the tune of around 5%. We can't say the same for other cities around the country. So cheers to Columbus for continuing to, give us something that is really, really appreciating year over year, it seems like, and performing. Couple other things. The average sale price versus list price is decreasing a little bit. I think a couple years ago, we saw people going above the asking price quite frequently, especially in very, very hot markets. Things are kind of trending down a little bit, right around 98%. So it's still a great market, and I don't want you to think you can get a house for 80% of the list price, because that's just not the case right now. But that also kind of comes into the inventory. The inventory continues to tick up. People are holding on, waiting to see what the market's going to do from an interest rate standpoint before making a move. And so, we're typically seeing right now inventory from last year to this year is up around 40%. A lot of opportunity for buyers. We're encouraging our buyers to get out there. Even though the interest rates are still coming down, you always got that chance to refinance as things kind of shake out into 2025. So Zach, we're in an election year. I know buyers and sellers can have their own opinions on what is happening with an election year, but what's reality? I mean, what have you learned about various trends in an election year?
Yeah, absolutely. So with an election year, there's a whole lot of buildup leading up to that November decision, and it does that uncertainty creates a lot of people wanting to just pause and wait to see what's going to happen. Not that there's necessarily a significant impact one direction or the other, it's just the uncertainty. Right. So leading up to an election, there's usually a little bit more just sitting and waiting. But then once the election is done and everybody knows what's happening and what's going to change or not change, that certainty comes into play. Yep. And then more things happen. The activity picks back up. And I especially expect that this year with the Fed, everybody expects another rate cut right after the election. So between settling the decision and people knowing what's happening and giving that comfort with whatever's going to happen next, just knowing, plus the interest rate impact, I think it's going to be a really busy time after the election going into the end of the year.
Yeah, I agree with you. It almost feels like people think that policy is going to drastically change once a new president or a current president is in office, right? And the reality is we're likely going to have a split House and a split Senate. So regardless, policy is going to take a long time to change, and we're not going to see much of a change after the election on that Tuesday, right?
Yeah, it's not necessarily who or what group is in power. It's the fact that people now know and can plan accordingly, and that comfort with knowing what's happening is what makes people feel more able to take action. And historically we've seen that in the stock market too. After an election year, regardless of what side wins, things improve in the economy.
And there's a lot of fear behind it too. That uncertainty kind of prevents people from making decisions, right? I mean, we've seen it in our industry and multiple industries that fear essentially equals people not making a decision. So, great insight. Thanks for sharing.
Thank you.